Thank you, Caroline. Welcome to this session on EU competitiveness, advancing impact investing for growth. I'm delighted to be joined by Jan Ståhlberg, founder and managing partner of Trill Impact, a company he founded in 2019. Jan has more than 25 years of experience in private equity, but he started his professional career at Ovako Steel, after which he transitioned to the private equity world in '95, where he was part of the initial team at EQ Partners. At EQ, Jan served in several senior positions, such as Deputy CEO and Vice Chairman before leaving in 2018. He's currently on the board, a member of the board of Trelleborg, Bactiguard and ITB Med, and he also chairs the Swedish Chess Academy. But it's really about EU competitiveness that we're here today. Last year, Mario Draghi presented a report on the future of European competitiveness at the European Parliament. Jan, to say much has changed since Mario Draghi's report is probably an understatement. But in your opinion, where does Europe stand with respect to competitiveness generally, and then the impact investing sector specifically?
Well, Mario Draghi, he pointed out in a very brave way that Europe has lagged behind, and it's of course obvious for all of us when it came to innovation, essentially since Lehman, US have outperformed Europe massively. On top of that, of course, they have lower energy prices, partly due to the war, but also to different policies. So the energy prices, of course, have been driving growth for the US. But I think the larger effect is innovation. And of course, Mr. Draghi also pointed out the independence, climate issues, and of course, security. And the fact that we now have Mr. Trump in office, I think have put the speed on all the proposals that Mr. Draghi have. It's quite obvious we're living in a different world today. Mr. Draghi pointed out all the issues that Europe had, but now I think we all realize we need to act upon it. We're a little bit on our own. We can no longer take US leadership for granted, and frankly, it doesn't seem we are in the same team for the time being. So this is a tremendous opportunity. I was in the US 2 weeks ago at a large private equity conference there. And the sentiment in Europe and US is completely different. And I think it's almost shocking as a European that nobody really criticized Trump. I sat on an energy transition panel in Orlando. Same week, the Secretary of Energy, Chris Wright, went out and said that don't invest in alternatives, it's going to cost you. The West has, in a shameful way, been telling us that coal is a bad thing, coal shouldn't be developed. This is nonsense. This is Secretary of Energy talking in the US. This, I think, is a disaster for US when it comes to climate policy, but it's an opportunity for Europe. We need to step up.
So let's focus a little bit on how this geopolitics will affect global impact investing and how, let's say, the current climate will benefit the impact market in sort of the different sectors.
I think it will benefit the impact in the sense that it's all obvious now that we need mission-driven investing. We need more investors that are mission-driven, that reflect. And I think Europe will put more capital into this space. There is a drawback that, as you know, the US administration is trying to make ESG and DAI issues illegal, essentially. And they're even trying to force European companies to sign up to that they don't have DAI policies or ESG policies, because then it's illegal for US state and pension fund to invest with those managers and for those corporates to supply US federal agencies.
But will we see the European companies complying with these US requests just to keep the business coming in?
I think it will be a mixed picture. Some businesses that are very dependent on the US, they will at least have to take away their visible targets. And you can already see some of the companies are doing that, because otherwise, frankly, they're out of business. I do believe that virtually everybody will cherish the values we have in Europe where these things are important, and they will work at it, but they will reduce, of course, the targets that are visible, and sometimes they may even reduce the efforts a little bit. I do think in climate change, and definitely when it comes to the US, as you all know, solar has developed quite well in the Republican states, the red states, and it's actually the most efficient and cheapest way to get energy. But of course, if the Secretary of Energy tell you, don't invest in alternative, it's going to cost you. This will make some investment committees, at least in the US, to hesitate and pause for a while.
So what we've seen since, I mean, when the report came out, it was last year, so the world has changed completely, and we're, as Europeans, having to sort of find financing for wars, for rearming ourselves. In terms of where that money's going to come from, is that going to impact the investments into other sectors?
Well, I do think there will be an impact, and we've already seen some institutions that have actually allocated capital for defense purposes, and they're now looking for teams to actually deploy in those areas. And as you know, if you are actually starting to produce artillery ammunition for the time being, it's a 2-year delivery time. Nobody asked about the price. So of course, the profitability of defense companies are enormous for the time being. So of course, there will be capital directed to that. The good news is that, of course, the European government have sobered up. We need to take responsibility for our own security and defense. And I think the Swedish government, of course, have said that they will start borrowing to invest in defense. They will increase with 50% essentially of GDP. And of course, Germany is doing the same thing. So there will be an expansive fiscal policy in Europe. So I think many businesses will benefit. So I don't think we're going to run out of capital for innovation. I do believe it's important that we do it in AI. When I am in the US or in Middle East for that matter, or even in Asia, lots of talk are on AI. If you talk to hedge fund and investors in the US, you have 40 minutes and they talk about opportunity. They talk about half the time on AI. It's not the same thing in Europe. So I think we need to step up on the tech side if we're going to catch up with the US, and we need to focus on these issues. As you know, there's virtually no alternative to the US tech companies, and they have an enormous growth. They invest way more than what we do in Europe.
So looking at what Europe still needs to do to drive competitiveness generally, impact investing specifically, given the US has got its own problems to solve. You've talked about AI, you've talked a bit about technology. Can you sort of drill a bit more into that?
Well, to a certain extent, I think it won't be as extreme as the US when it comes to deregulation and making things easier, but I do think we will have to have a little bit lighter regulation. I mean, we've seen SFDR, which I think is essentially a good thing, but of course now we are reducing some of the burden, particularly for the mid-sized companies and the smaller companies. And I think that is sort of a little bit of a sobering up. But I still think that this is an area where we can lead. The other thing where we need to do is, of course, increase the efficiency in the capital markets. Even in the areas where Europe, where innovation have been quite good. In Scandinavia, for example, Stockholm, you have quite a lot of unicorn per capita, even compared to Silicon Valley and Israel. But of course, Spotify listed in New York. Klarna is now listing in New York. King listed $5 billion in New York and so forth. iSettle was sold to PayPal. Minecraft was sold to Microsoft. I think in Europe, we have to build businesses. Of course, you have certain entrepreneurs that can make an enormous difference. A gentleman like Sir Demis Hassabis, who actually won the Nobel Prize in chemistry this year. Of course, he leads Google's AI activity from London, which is, of course, an enormous thing. And they actually moved it there thanks to Sir Demis alone, because he said, I won't move. And of course, Google for a long time argued, you have to be in Silicon Valley. Nothing good comes out of Europe. We need entrepreneurs and leaders like that, but we also need the capital markets to develop and grow those companies, because so Europe can do it.
What's needed to make this grow, and is that in the pipeline, or is it just going to happen because, you know, Trump is changing the way the world works?
I think there has to be a little bit of a change of mind and when it comes to assessment of risk. As you know, the Americans have for a very long time had large parts of their capital being invested in alternatives, in private equity, in venture. Europe have had more of a bond mentality, less risk than the Americans. And when things move so quickly as they currently do, with all the opportunities in AI and with the enormous investments we're going to see in infrastructure, and I think combined with venture companies in AI, this is a tremendous business opportunity. But we got to have the mindset and we have the capital to fund those companies. And that opportunity is there, and I think Euro's responsibility lays within. And I think we all have to step up and take our responsibility to take those risks and support the ecosystems. Unfortunately, it's not a brilliant political leadership. It's not as bad in the US. Of course, Mr. Trump is on a mission, but the mission is the wrong one. So that's a problem. We are mission-driven investors, but we don't have a lot of political leadership, because if you look at Germany, UK, France, of course, they're not united. I would argue they're not even strong leaders. It won't be solved in Brussels. And then, of course, you have leaders like Orban and sort of some of the Eastern European companies. Europe is not united.
Do you think France could sort of emerge on the tech side? I know it's sort of trying to sort of create its own little mini Silicon Valley and sort of funding.
I do think there is a lot of young European entrepreneurs that can do it, and there is lots of drive. And I mean, the opportunity here when it comes to impact in particular, I lecture a lot at universities for different reasons. I myself grew as a poor kid, and school changed my life completely. And I have spent a lot of time with young talent, and I know that they are mission-driven. Of course, there is a little bit of a setback for the time being. Climate is not on top of the agenda like when Greta Thunberg were active a few years ago, but the generational trend is there. The 23-year-olds I meet of today, they will not accept that their pension capital is not invested in companies that basically make a difference. And the good news is that I spent 25 years with EQT. I know how to make money for investors, and I set up an impact firm basically to be able to tell investors, listen, we can make as much money as all the other private equity firms, but every euro, dollar, krona invested will be dedicated to a positive need that helps people's daily life, the society, or the planet. The young generation will demand this. 60-plus guys like myself, it's a lost generation, generally. The hope is in the young generation, and they will change, and they will direct capital. And this is a tremendous business opportunity. It's not happening in the US for the time being. We have the ability to take the lead here in a number of areas. And if we create good services and products that are impactful, those companies will be incredibly valuable in 10 years.
So in the last minute and a half that we've got, if we had to sort of figure out what 3 things the investors in the room need to do to sort of support and drive, the investments that will make the younger generation prosper, what does Europe have to do? Is it a regulatory thing? Is it a particular area we have to invest in?
Unfortunately, it's more than 3 things, but of course, we need to deregulate. We need to assess and invest in European entrepreneurs, European managers, and of course, particularly impactful companies. We need to take responsibility of the capital allocation. There are more capital in the US, and it's primarily going to be dedicated for them towards the US. So now we need to take responsibility for Europe, and that's a very important aspect of it. I think we have to be brave when it comes to embracing new technology and combining it with infrastructure needs, where we know that they are enormous. We are building the future for Europe. It will be tremendous opportunities to make money on it using new technology. It's an openness in our mind, and of course, it's very depressing to read the press. And of course, the thoughts we have that there may be war and we may have to send our children to war. Even 6 months ago, this was unthinkable. We can't have this thinking taint what we do. We have to be optimists, we have to invest, we have to believe in the future. Of course, we cannot be naive, and Mr. Trump have shown that, so we need to stand up to this bullying that is currently going on. And we need to take responsibility, but we got to believe, and we need to take risk and take the opportunities. iPhone didn't exist before 2007. There was no apps, was not the internet access. The opportunities we have over the next 15 years will be absolutely tremendous.
And I think we should end on that note because, of course, with news being so depressing, I'm actually leaving this stage positive that there's potential in Europe to bring sort of the talent home and to really incubate it for future generations. Thank you very much, Jan. Thank you for everyone for listening.